Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson. I'm making professional trading simple. And welcome back from your Thanksgiving feast. I hope you didn't get indigestion after looking at today's markets. I hope none of you were long. I had mentioned that I did. I said the risk is to the upside at this point, and I did not recommend holding long into Friday and over the weekend. So I hope none of you did that. This is why. Today it was the Dubai news. Apparently, they're looking at some debt that might not be repaid, which is probably causing a lot of nervousness over here. So the Dow, which was actually the strongest today, was still down 1.5%, followed by the S&P and the Nasdaq down 1.7%, and the markets. So very surprising from, not very surprising, I guess. Just not expected on a Friday. Figured it'd be low volume, kind of small little doji again today. But the markets had other ideas once the foreign markets didn't fare so well. So as you can see here, though, on a 60-minute, the Dow, even though it had a major pullback here, did find support right down here in this area, bounced straight back up again. I'm looking at a 60-minute on my futures, and there seems to be a lot of up movement there as well over the course of the day. So a good recovery. After it opened so low, there was a recovery, even though it ended up down as far as it did. It did tend to move most of the day. If we go back to a 60-minute, you can see here that, remember this big channel we were in? I said, yeah, it really just kind of looks like a big bear flag. This kind of looked bullish, and then I was mentioning to one of my students that now that we had all this information in here, it still kind of looked now kind of bearish. So today we had the big drop right back down here to right around that 10,200 mark. Notice how the low was 10,231. There are a lot of buyers in this area. That's why I keep telling you that this 10,200 mark would be the first major area for the bears to get through. Now we did get down through this bear flag, which is interesting now that I'm looking at it here. We got down below this bear flag, came back up, held, and now we're on our way back down before we did end up at support. Where this will go on Monday is anybody's guess. But it's interesting that we broke this big upwards channel bear flag looking formation that we had on the Dow. Now, if we look at the bigger picture, I mentioned that was a fractal. This has done the same thing, moved up and kind of moving upwards and sideways in a big bear flag. Let's see if this follows suit. The next step for it would be to break down below this 50-period moving average. So that would be a reflection of what we were seeing on the 60-minute. Nasdaq on a 60. Look at this big recovery. Huge gap down today, right into heavy support. Very logical place for this thing to stop today. Move back up to where? Yep, resistance before pulling back again. But this was a pretty big recovery for it. It did a pretty good job of recovering most of the day. Monday's anybody's guess where this will go now with Christmas coming and the end of the month coming. Here's a little bigger picture of it on a daily, and notice that we are now out of this rising wedge once again. So into it, back out of it, into it, and back out of it. Let's see if it'll hold this time. Weekly, now we can look at this one. Still just a teeny tiny little black candle, which looks like a pullback in the grand scheme of things. On a weekly time scale, this just looks like a pullback. So we'll see what happens come next week with end of month and a new December starting out. We'll see if this makes any kind of a difference. I will be diagnosing all of this again on Sunday, so I'm going to blow through a lot of this today just to kind of get on to the next section. And most everybody's gone anyway. No one's doing a whole lot of trading at this point, so we will hook up again on Sunday. Notice how the SPX is straight sideways. Highs up here, lows down here, not really going anywhere for the most part. Big down, some up, but overall, look at the bigger picture, and it's straight sideways for the S&P. Daily looks the same way. Look at how we're just consolidating sideways here. Coming back to the 20-day moving average, which of course acted as great support today. But you know, the bigger picture is we're in a little trading range here. We're just moving sideways, waiting for a break of one way or the other. Weekly, another little doji sitting below this rising trend line here, but this still is of the bullish sort until we get a break down and below some of this other heavier support below it. The VIX having a nice move up today, 20%. That's huge. So the VIX definitely confirming what we're seeing in the markets today. On a weekly, that changed things quick, didn't it? Wednesday, it looked like it was going to close right here on this dotted line. By the end of the week, pow, we're up above and at the 20-week moving average. So that's why we always wait for the weekly candles to close. You just don't know what you're going to get. Apple on a 60-minute, right back down to this support here at 198, bouncing back up to close it. Back down towards the end of the day, but a nice recovery on Apple. This thing here now is telling me above 206 long and below 198 short. These are the places to be watching Apple going forward. From a daily standpoint, you can see it kind of bouncing here. This is ugly. Look at these gaps. This makes Apple tough. From a day trader standpoint, it's actually kind of fun to trade these. If you see this thing gap way down to start the day and then start to run up, boy, you can play that thing to the upside and could have made, a $2, $3, $4, $5, maybe $3 off of it today on the move back to the upside. And if you had your stops in place, you'd have been just fine as it moved back down later in the day. So that type of movement isn't bad from a day trader standpoint. From a swing trader standpoint, it's frustrating. Overall, the weekly just looks like a big pullback like everything else does on the weekly. AINV, 60-minute, closing this out. Finally got the open below this line and a close below this line. So this should look like a big old gravestone doji. Sure enough, that's exactly what it looks like. On the daily, waiting for a breakdown below here. But overall, the week, kind of flat on the week. Hard to trade this one during the week, as was most everything else. CTB, same thing. Everything gapped down but made a hard run back to the upside. If you were day trading today, you had great opportunities to trade some of these intraday only. From a swing trader standpoint, nothing to play here. We're going to wait for next week to get some plays, some more major plays. CTB, though, is down below and staying below this heavy support. So now in the longer view, you're looking for a break below 17. Some of these I might keep on next week. They really didn't move a whole lot this week, but they're still set up pretty nicely for some moves that may come next week. EDU, go right to a daily. You can see it below this support area here. This was a good defensible intraday short. When it got below this area, ESS on a 60-minute, it's continuing to move back down 2.86% today. From a daily standpoint, below the triangle now. So intraday plays, yes, intraday plays available here on ESS. A lot of things moved up, moved back down, all in one day. So great intraday plays on this stuff. From a swing trader's perspective, yeah, you could be short this. I'm not sure I'd want to be short over the weekend just in case, but we will pick things up again for sure come Monday, which is the last day of the month, I do believe. FAS, gap down, move up, gap down. So from a day trader standpoint, once again, great day to play. However, from a swing trader standpoint, not so good. Really no play in here. We'll wait till next week on these. FAZ, same thing. Move up, move down, move up for this one, of course, because it is an inverse. It is the bear ETF. So FAZ now up above this area. I'm liking that. I'm liking that from a long standpoint. Now up over 2150 is another good opportunity to get long FAZ. Where does that put us on the daily? Right back up here to this overhead resistance. Gee, go figure. The same thing we've been fighting with. This upper trend line here is really, really one to be watching. I'm really looking for a break above this and ultimately a close and a couple of closes above this. What's amazing to me is some of the volume that came in today. Look at how, look at this big candle and this huge volume on a Friday where I thought the volume would be even less than what it was Wednesday. So still a lot of volume pouring into some of these stocks today. Makes sense. If Dubai is having problems with its banking system, of course our banks are going to see some volume today. That would only make sense, I guess. SRS, same type of a move, but really so great from a day trading standpoint, but not good from a swing trading standpoint. It never broke either one of these more major areas, and on a daily you can see that we're right back into the moving averages on SRS. So we still need a break up and above 10 and then ultimately above this upper to really get long SRS from a swing trading standpoint. So a very